Let me now bring on board Manoj Rane, Head Fixed Income Group with BNP Paribas. Manoj, good afternoon. Thank you for joining us. Manoj, bond markets are looking rather dull today. How come markets are not reacting to comments which have come from Mr. C. Rangarajan, where he has clearly indicated that the government is committed to maintain fiscal discipline?
I think overall 2012 financial year, 2012 calendar year has been very positive on most fronts, be it the currency, which is 8% up, be it bond yields, you saw the 10-year touch a 9-month low of 8.13 a little while back. It's at 8.17 or so. So I do think that, a lot of the positives are already factored in. And, there have been, of course, many positives, like there have been very large FII inflows from the start of the year. Your currency is the best performing currency in Asia this year, etc. So I don't think you will possibly, every news and every soundbite possibly does not need a reaction, and possibly it's slightly in an overdone zone for the information that has to be digested entirely.
Okay, but here's the soundbite, Manoj, that I'd like your reaction on. Today you had Dr. C. Rangarajan also mentioning that the trade deficit is going to be at 9.3% of the GDP. Now, that's a bit scary, and there's also talks of how the fiscal deficit target is going to be reworked. 5% does seem to have become a certainty. How do you believe the bond markets will read into all of this?
See, that's where I was coming from. I think for all the positives that have played out, fundamentally there are a lot of negatives. And the market does tend to get a little ahead of itself. Having said that, the underlying support for the bond market has been the fact that market expects a round of rate cuts and possibly CRR cuts, with RBI's commitment to ensure that liquidity remains in a reasonably comfortable zone from their point of view. So I think overall, though these are negatives, both the current account deficit as well as the fiscal deficit are possibly going to remain high. Current account deficit is, we are possibly the only country in the region, as I said, which has a current account deficit, and which will keep the currency possibly from appreciating much more from the level it is at. On the interest rate side, of course, I think what will really count and what will really call the shots as far as further fall in interest rates is concerned is where, when and where RBI starts cutting rates. So I think overall there is a balance, that there is negativity, but the fact that we are at, still very high interest rates in terms of regulatory rates, and that there is a lot of room to cut, means that will possibly lead to, softer bias on interest rates.
Manoj, crude is at a 9-month high. Last time when crude prices appreciated to $120 per barrel, Reserve Bank of India was worried. The comments which came from Reserve Bank of India last time crude was at 120 is that inflation is a problem and inflation will be a challenge. Now that crude price is at 120, do you think Reserve Bank of India could reverse their commentary?
I think there is a huge difference between last time and this time, which is that, if you have had food price inflation, which has been persistently negative, which is very good news. Even non-food inflation, excepting for oil and oil products, has been, extremely benign. So these factors themselves act as balancing factors to the expected possible rise in fuel prices. So to that extent, I think I wouldn't say that the regulators would be sanguine, because of course the situation in Iran, which is really feeding into oil prices, is a cause for concern, and it's anybody's guess as to how it is going to play out, because it is far more political than financial. So my sense is that at this time the concern would be lesser. And I do think that, helped along by a very high base effect as far as inflation is concerned from the previous year, I am still inclined to believe that, WPI numbers will continue to fall within where regulators are predicting. So I don't think that's a major cause of concern for the central bank as yet.